Hey, it's so disheartening when you lose a family member and now you have the burden of their debts. You have the burden of also making sure that all the things that they were responsible for are now yours. I'm thinking about a single mother who is got children, and now when they are no longer, the children have to find their way out of that. I'm really thinking about a stay-at-home mom who has been financially dependent on the husband, and there's no security what happens when that husband is no longer. That's where life insurance plays a key role. We've been looking at the different dynamics with Clyde Parsons, who's joining us for this chat. He's a qualified actuary and insurance professional. Clyde, let's talk a little bit about that, because how can life insurance play a key role for estate planning and wealth transfer? Because there's a lot of administrative things to get hold of in that case.
Spot on, Benjamin, and it's a great tool to use in that instance. So let's first talk about that administrative and really the stage where there's a cost incurred with dying, which is the reality. And if you think about it, when someone passes away, there are immediate costs that line up, unfortunately, for the family that is left behind. So the obvious ones are the executor's fees, the cost of wrapping up the estate and winding up the client's estate. And then there are taxes, estate duty, where the state levies a tax on the value of your estate after passing away. And then another one is capital gains tax, where any assets that you've gained and accrued through your life are almost deemed as being sold at that point. And the gain the difference between the price you paid and the market value when you pass needs to be taxed as well. So those create an immediate cost to passing away, which is often ignored because we don't want to have those hard conversations. Another one in terms of estate planning is just liquidity. You know, you might have an estate where the breadwinner that you mentioned has taken good care, built up a nice asset base, and there is a value in that estate, but accounts are frozen and there's no cash on hand. And the reality is we need money. We need money this month. Bills need to get paid. And so creating a bit of a liquidity injection for the family is something that a policy can do as well. Important there, the beneficiary, in other words, the person who's nominated to receive the funds, needs to not be the estate because the estate is frozen or being wound up. It needs to be an individual who can use that liquidity for things like the funeral and these costs that we've mentioned. So that's estate planning. When it comes to wealth transfer, it's a very, very useful tool because effectively it creates a mechanism to give a very specific bequest or put a very specific sum available for a very specific purpose. And I'll give you an example.
Sure.
Let's say that I own a farm and the farm is worth 5 million rand. It's running, it's a beautiful farm, but not all of us are cut out to be farmers. And I've got two daughters, and the one daughter has expressed that she's got an interest in running the farm. She's passionate about farming. She wants to stay on the farm, and I want to keep it in the family. So it would be great if I could leave her the farm. But my second daughter, not so interested. She's got different ambitions, and she wants to go and make a life of her own and prove herself in other fields. Now, if all I own is the farm, what am I going to do? Because I want to give both of my daughters something. So what I can do is I can use life insurance to equalize the inheritance. In other words, those indivisible assets like the farm, I can create a solution. So in our simple example, I might have a life policy of 5 million for my second daughter. So they both get something worth 5 million and we don't have to literally sell the farm. So it's got mechanisms and tools like that where it can really help a family and an individual with estate planning when it comes to taxes, the costs of dying, liquidity on death, and also the specific bequests. The one thing I would say, though, is the costs on passing away are not massive, but the biggest cost that we often don't appreciate is just that cost of losing a breadwinner's income.
Yeah.
And so from a prioritization perspective, I always like to say, let's first make sure that we can put food on the table, roof over our heads, and get the kids to school. And then think about legacy policies, which are what we're talking about now. That's wealth transfer mechanism.
I see, I see. You know, when we take out life insurance, it's obviously coming from a good place, right? Making sure that, as you've just mentioned, there's a roof over the heads of our children and our loved ones, our dependents. They're going to school and they're financially well still, even after you've left. But what we can't do is know exactly how they're going to use that money. So are there ways that you can plan for the money to be used in a very specific way? There was a show here in South Africa called I Blew It, and many of those I Blew It stories of people getting huge lump sums came from life insurance, where in a year, and sometimes even less than a year, all that money is gone, and now there is no roof on their head, there is no food in the fridge, and there is no education.
Yeah, Palesa, you're spot on, right? It's not a South African problem. It's a global problem. It's even been coined a name. It's called the lottery effect, where we get this lottery sum and suddenly we blow the cash, and it happens with a lump sum. Absolutely. So a couple of solutions that you can do there. The more traditional one is setting up a trust and writing into the rules of the trust that the beneficiaries can only accept the money in this way at this time for these things. That's administratively a little bit more expensive and cumbersome, but it can work absolutely. And a lot of families use trusts to do exactly that. A simple example is when the children are still minors, they actually can't take the cash. So the trust facilitates how they spend the money. A second example is, using a trusted family member or a financial advisor. But again, they can only do so much. Legally, they can't hold a person's cash back. They can advise them. They can express your best wishes. The same as you could put them into a will and express in your will, this is what I want to be done with the cash. But again, that's got limitations. A third and interesting option is the products that you buy. So traditionally, we think about life insurance as, number one, only for on my death. What's worth noting is life insurance covers death, but also life-changing events like disability. Second thing is, historically, we think about it as a lump sum, which I'm going to blow. But there are novel products in the market that allow, while you're still alive, the life insured, the payer, the owner of the policy, to make informed decisions about how the benefits pay out on your death. So what you can do, for example, is you can buy more cutting-edge, new-age policies where you have access to a lump sum and or a recurring benefit. And what you could do then is basically bleed the money out to your family in a more responsible way by choosing that recurring benefit. Okay. Interestingly, it's also a much more efficient and cheaper way to buy insurance. And there's a couple of providers in the market who are now adopting that approach as well.
Well, we have to leave it there. Just final question in a few seconds. Clyde, where's the best place to get a life insurance?
I think the best place to start, Benjamin, is some life insurance is better than nothing. That's the first thing. Second thing is talk to someone who's informed, and a professional, qualified, independent financial advisor is a great place to start. And we're very lucky in South Africa that we've got phenomenally well-built products that are literally on the cutting edge globally of quality insurance available to us. So a financial advisor can then look at your unique needs and direct you in the direction of the right product for you.
Well, Clyde, you've been fantastic. Thank you so much. You've given us such a broad understanding of this matter. Thank you for giving us your expertise.
Always a pleasure, Benjamin. Thank you for the time. Take it easy.
Well, Clyde is a qualified actuary and insurance professional. Do you think we know enough about life insurance?